Financials holding strong amid today's sell-off as the best-performing sector, although still in the red and sinking deeper into a bear market. Bob Pisani is at the NYSE with the details. Hey, Bob.
Hello, Melissa. You know, the good news today is the banks, particularly regional banks, outperformed on a relative basis today, all right? But with the S&P down 2%, some banks were flat or eked out small gains. So Comerica, Fifth Third, Wells Fargo, Bank of America, PNC Financial, not bad. The bad news is this group is down nearly 20% for the year, and it couldn't even sustain a modest rally. Banks led stocks off the lows right after the open, but they couldn't even sustain 2% on the day. That's pretty small, and by midday, they sold right into the rally. Oversold doesn't really describe what's happened to this group. Most of the big names, your Goldmans, Morgan Stanley, Citigroup, Wells Fargo, Bank of America, they're down 30% or more off of their 52-week highs. Goldman in particular, of course, caught up in a major investment fund scandal as Malaysia files charges against that firm. And now we're seeing other sectors of the financial sector getting hit. American Express, for example, this has been a big winner this year. It hit an historic high just 2 weeks ago, but it's come down from 114 to 101 in that very brief 2 weeks. Same with the credit cards. Visa's been a monster all year. Historic highs around 150. What was it in October? Since then, it's traded right in line with the S&P 500. This is the S&P Visa, still up 16% for the year, though. Same with MasterCard. Historic high in October, trading almost in line with the S&P since then. These two names acting like some kind of future barometer of U.S. consumer spending, which is really sort of what they are. You still don't let the sell-off in these two names spook you too much. There is a multi-decade shift that's been going on from cash and checks into electronic payments. We've been covering this for years, and these two are the stars in the space. I would expect that growth to continue into 2019. Back to you, Melissa.
All right, Bob. Thank you, Bob Pisani. Our next guest says despite the fallout in financials, there's still one name in the space that is worth a buy. And it might surprise you. Chartmaster Carter Worth is over at the Plasma with the name. Hey, Carter.
Sure. I thought we'd do a little catch the falling knife in Goldman. But first, let's talk about the sector overall. No interest in financials as a concept, as a bet, as a long. Goldman seems a little extreme. So the current classifications that we have go back to 1989, as all will know. And what this is the weighting of the S&P, the financials within the S&P. And you can see here that basically we're nowhere near sort of epic lows. This was, of course, there was a recession in 1990 when financials were as low as 6% of the S&P. Right now we're about 13.5. But what does sort of stand out is if you were to draw some lines, again, this is the weighting of financials in the overall S&P. It's still nowhere near sort of capitulatory lows, as, for instance, energy might be. In terms of Goldman versus the BKX and then Goldman specifically, this is the correlation between Goldman in blue and the BKX, dominated by super cap financials, of which, of course, Goldman is one. And then you've had this fairly extreme news-related. We just heard from Bob, right? But the question is it overdone, or is the market in Goldman now discounting all the bad news? So down 4 versus up 22. Let's draw some lines. What we have is the index, and this is the risk for financials. Are we down to the election low? Meaning this is the presidential election, and now watch this. If I put these lines in, what we know is we are not down to where we were after the presidential in November of 2016. So my bet is that financials as an aggregate can still actually go quite a bit lower. By contradistinction, take a look at Goldman. Now, Goldman is, in fact, as of today, retraced the entire election move. You see the lines right there? You can literally draw it. We have gone and undone it. You also know this is a head and shoulders top, but to some extent it's been played out, right? The neckline being there. So my hunch is that Goldman is actually so bad it's good, having redone the entire election and then some, versus financials overall, which are not. One or two more charts and I'm done. There's Goldman again. One more, I think. Okay, now, this is going back to 1999 when Goldman IPO'd. And today, we touched down to the penny at this long-term trend line. Literally stopped right there. My bet is that you can get a nice little bounce off that line. Goldman, long, so bad it's good.
Carter must come over to this desk.
So
Carter,
bad.
come on over, please. Shelby will bring the chair in. Shelby, our new page. Welcome to Shelby.
Welcome, Shelby.
Welcome, Shelby.
sir.
And welcome, Carter.
Welcome, Carter.
So good it's bad.
So you had mentioned the idiosyncratic story that has Goldman underperforming the broader sector at this moment in time. How do we know that the idiosyncratic nature
We don't.
will
But
actually...
we know that the market has a way, after a long, precipitous decline, to have a capitulatory type day after news has been brewing.
Have we seen that in Goldman?
I'm going to make the bet that it's close enough. In the same
Okay.
way that J&J, after the first news hit, then you have a follow-through day, and you start to get it priced in, meaning we're looking for price discovery. If
Right.
something out of the blue happens, you don't do it day one. But Goldman has been under this pressure for a long time from the group, and then it's under specific pressure, idiosyncratic, to its security. And then today, yet another piece of news indictment. It seems to me, and again, the symmetry of the move, having retraced exactly the election, you step in and be a bit contrarian.
So, Carter, what do you make of, like, today? I thought was really interesting. American Express was one of the first mega cap stocks that actually made a new high during the recovery, and I think earlier this month. And now today it was down 4.5%. It's down about 11.5%. When you think about, okay, so you're talking about banks. We know that they've been the hardest hit among financials. Now we're starting to see consumer credit names, very specific, kind of take it on the chin. How do you think of that, X the idiosyncratic stuff in the banks?
Those were safety names to some extent, and then they go after, and they're doing that in the market. We saw what happened in staples today, meaning there's a cycle to selling, right? Typically the weak go first. We saw industrials roll, semis roll, then financials. But FANG was holding out. Then they go after the large cap growth names, and then money clusters into safety names. At the end of the day, in a real sell-off, nothing holds up. And we saw what happened in the staples today, meaning at some point the selling gets around to everybody.
It's interesting, CBW, and I'm sure you're going to be right because most of the time, he is right.
It's in the pantheon of technical
But it's interesting.
analysts.
I mean, forget about Goldman Sachs. So Goldman is what it is. Morgan Stanley's making basically an 18, 19-month low today. Wells Fargo's 52-week low. Citibank trading now significantly below their tangible book. Even J.P. Morgan is probably 16% off their highs. I guess my question is, and Mel talked about this on her other show today, there's something wrong with the banks. What do you think it is?
Well, remember, if we are truly going into a cycle change, even a contraction, financials will underperform. There's almost no instance in history where financials are outperforming in a period of economic weakness. So, in fact, the pairs trade that I'm sort of arguing for is that financials likely do have more downside, whereas Goldman, again, it's risky, might have priced it all in.
Where does volume come into your analysis?
It's the number one thing. So volume is more important than price, right? The level of activity, whether it's in real estate or in any endeavor, the more frenetic it is, the more symptomatic of a transition. And great volatility, which comes with great volume, occurs at market bottoms and at market tops. This is clearly a market top. We've been topping for a while. We made a good 10-year run, a lot of volatility and a lot of volume coming into individual names.
Carter, thank you. Good
Thank
to
you.
see you. Carter Braxton Worth,
Love him.
the pantheon of
Where can you
TAs.
see Carter each
pantheon.
week, aside from this show?
On Options Action,
Love that
amongst
show.
other shows.
Great show. One of the things I think is interesting, he drew his chart. Say what you want about banks, and let's get to the fundamentals. Since the election, I think there's a number of important fundamental differences to why banks should be trading above that election level. They include the fact that the regulatory environment or deregulation is certainly their friend. I think it's a very different environment. That may have been half the reason you bought them. And their balance sheets have been validated and stress tested over and over again. So that's the one part of this that is troubling for me, because banks shouldn't be trading here on valuation. They shouldn't. I get that they could be less profitable. I get that there's credit out there, but not with these balance sheets and not in this environment.